Good morning, everyone. That's what I'm talking about. We're going to start early on a nice Saturday here. Talk about the most anticipated earnings for the next week. These are the earnings reports you got to watch. I'll go into detail on these as we go through. Let me know in the comments if there's one in particular you want me to look at, and I can certainly do that. So I'll give you three right now, three focus stocks as we go along, and we'll see how that goes. So again, if you want to see more, let me know, and I can make a video on a specific stock if you want me to. So we'll start right ahead with Monday. Monday prior to open, you're going to see Hasbro. Obviously, strange one. Hasbro being obviously you probably most know them for board games. I would assume is where you know the name from if you did. But they also have some exposure into the video game territory now as they're making games digital, where the era of board games aren't quite as popular. It's slightly ended as you get digital board games now for the most part for those interested. So weird. Don't necessarily know what to expect from Hasbro here. Should be the best quarter, obviously, in terms of revenue. Q4 is always going to be the biggest quarter for them. Over, obviously, the December time frame. Big stuff. After them, we have Global Payments. Saragon. We do have Energizer on here. Energizer, again, as I mentioned, Q4, the biggest quarter for Energizer. Because if you think about Christmas, how many children's toys need batteries? Come on now. We all know it. Batteries are needed all the time anyways, but this year, this time of the year, specifically more than ever, so should be a good quarter for them just naturally. Q4 is just big for them. We've got Sorens, Saya after them, obviously logistics, transporting, see what that looks like. General Finance, CNA, and Gates. After close, we already have one of my focus stocks right here, bright and early, baby. Really not, because they're reporting after hours, so right at 3 p.m. actually. It's going to be Chegg. And why Chegg? There's many reasons why. Chegg has been one of these companies that's absolutely been stellar prior to and even... Sorry, don't know how to speak. I forgot how to speak English, and I hope you apologize. I don't hope you apologize. I hope I apologize. It's a train wreck out of nowhere. I'm telling you, the brain does some great things. But Chegg here, I need to start using it clearly because the resurgence and really the push for online schooling now that, frankly, if we're being honest, even post COVID, there's a 100% guarantee that they are going to be giving kids the option to do partial schooling online, even through K through 12. So this is going to be really an inevitability, and Chegg is one that really, really benefits from that. They benefit in general just as far as school's concerned because people definitely need help with tutoring. This is a service that lets people, it can help people with their math. They can help people with every subject. They have tutors on there. And that's where Chegg sees their benefit. I say specifically with the online aspect because some people really don't learn well online because they're in charge of their learning experience for the most part. So it really depends on the teacher and how they're handling it, but I think a lot more people probably are going to need a service like Chegg for tutoring. We also see the book purchases as well, which is an interesting thing to think about. Obviously, ebooks more vital than normal text at this rate, but worth mentioning here. Chegg's one to look at. Expected an EPS line of 49 cents compared to 35 cents a year ago. This company's really transformed that EPS line and turned into a profitable company, which is pretty exciting to see. And a revenue increase expected of 51%. They're supposed to put up $189.55 million. Should be a really big quarter for them. This quarter includes, obviously, school finals. So people are going to need a lot of extra tutoring prior to that. So you do need to consider that, and obviously this entire quarter through the end of December is pretty well in. It's darn near the entire semester is going to be included in this quarter, so pretty massive, an important quarter for them. And you see a 51% increase, again off of a $189 million number is not incredible, but the increase percentage is quite nice, as the company ideally can hit the billion-dollar mark by 2022. We'll see if they stay on that path. After them, you have Take-Two. We just saw from Activision Blizzard earnings, which were quite stellar, just how much video games have been outperforming this year compared to previous. So it's going to be a really good one to look at because they should put up really, really good revenue numbers. You have Simon Properties, most prominently known, I'm pretty well sure, for high-end malls. One that's been hit quite hard, but again, a decent company still in the portfolio of properties that they own. There's Amcor Technologies, not much to say about them. Nuance, AECOM, Health Equity, Veronis, and KKR. Tuesday before open, we're starting off with a little bit of the ganja. Canopy Growth. Don't know. Again, I'm not a proponent of these stocks for many reasons. Obviously, it's not something I partake in. And frankly, I don't typically invest in stocks of things that I slightly disagree with, So, Canopy, what do I have to say besides, negative earnings? That's icing on the cake for me that the company doesn't bring in profit, and it likely will continue to not because this year's been pretty harsh. But they should see increased business, all things considered, as we've seen legalization increase throughout the United States. So that's one positive thing for this company you need to look at, and we'll see what that does for them. Corsair after them. Cody, Centene Corporation, Sequans, okay. Wesco, new residential investment. We love NRZ, okay. This is our stock. This is exciting stuff. This is a company that could continue to recover that dividend which they completely wiped out for a little bit, dropped it down big time, and the recovery's been incredible. We'll see what they're able to do. Still with some troubling economic times, it's going to be hard to say what the future looks like for this company in terms of their benefit. Obviously, mortgage-based. People are getting loans, mortgage forgiveness, and there's going to be a lot of foreclosures coming up in the next year that you have to look at. Perion, Avaya, and DuPont. Obviously, we know them specifically because Jeff Gordon drives the NASCAR with DuPont. Is that true? Is that what he drove? Who drove it? Jimmy Johnson? Who Jimmy Johnson? No, Jimmy Johnson's definitely Lowe's. I don't watch NASCAR, okay? But someone's got DuPont. It's got to be Jeff Gordon. I know it. After close, we've got Twitter. If we look from previous earnings from these companies, from Snapchat to Facebook, you're going to expect a lot of user growth here, and demand being quite massive. Revenue line being pretty good because advertising revenue has been very high up for these companies, and ad rates obviously increasing quite a bit. You're going to see a good benefit for Twitter. So expect some decent numbers there. Profitability line, we'll see what that looks like, but not sure. After them, we have Cisco, pretty boring company that never does anything super crazy. Again, the focus here is going to be data centers for them, how that works for them. And we'll see what that looks like. So after them, we have Enphase, Alteryx, Mattel, Glue, then Lyft. Obviously, I want to mention Lyft here for many reasons. Lyft, I mentioned specifically because they're one of the businesses that has been completely demolished, frankly, from everything going on. Ride sharing has been hit hard. And Lyft, obviously, revenue-wise, has been crunched. And an EPS line even harder on them, as they're somehow trying to survive the tough environment that is going to continue to be that way for a hot minute. So you need to consider that with Lyft. I'm not expecting good numbers by any means. They could beat, but I really don't see it happening. I just personally know that the ride-sharing business is not going super well right now, as a lot of people don't want to get into someone else's car they don't trust. I mean, there's a lot going on. So, yeah, that's exciting stuff. After them, we have Akami, Fiserv, and Tenet. Then Wednesday before open, we got some good ones as well. We start with GM. Obviously, looked at Ford's earnings, saw a 9% decrease in terms of overall revenue. I think GM's going to face a similar boat there, obviously with overall demand not being quite where they needed it to be. It's certainly understandable, but we'll see what those earnings look like. Coca-Cola, after them, they're one of my focus stocks, and you may say it's a boring stock. Why? Well, it's because I like them. Average estimate of EPS here of 42 cents compared to 44 cents of a year ago. Nothing crazy. And then also a revenue estimate of 8.66 billion, which is a 4.6% decrease. And why is that a decrease? A lot of people might ask that. Frankly, it's because the restaurant portion of their business, which makes a good chunk of the revenue actually, has been shut down for a lot of companies, and overall you've seen less demand in fast food. So that's where some of that revenue decline is coming from, just so you are curious. But obviously starting to recover a little bit of that as restaurants open up. After them, Teva, Under Armour. Under Armour, I think, should see some pretty good demand over this quarter for them, actually. So revenue should be in a good spot. Veru, CME Group, InMode, Mastercraft Boat Holdings, Blackstone Mortgage Trust, and Bungie. After close, we have Zynga, obviously video game publisher. Probably going to be putting up some good numbers just because of the overall environment for them. Uber, I pair what I said with Lyft. Expect some really bad net income lines here. Really, it's going to be net losses for Uber. Probably a loss of $1 billion, I would assume, in this quarter. They might be able to reduce it to around $800 million. I'd be surprised, but that's rude to me. It's really rude. I shouldn't be given that rough of an estimate, but if it comes true, hey, you owe me something. But yeah, expect a bad revenue line. Probably a 30% decline in revenue year over year. If they manage to do better than that, I'll be super proud of them, though. I will be super proud. Then we have iRobot. This company was facing a little bit of a short squeeze with all the retail investors, everything going on. So the stock's been going wild. But iRobot, I think, as a company, has been doing really well. Obviously, fourth quarter being the biggest for them, as people give Roombas and products like that for Christmas gifts. And they also obviously have other products as well. You need to consider the mop as well as lawnmowers. I mean, come on now. Well, they're working on that. But training robots. I mean, they got it all. Okay, iRobot. They have the futuristic vacuum that people will all be into soon. Bloom Energy, Pacific Biosciences, Callaway Golf actually has been doing decently well as people got pretty into golf for a hot minute there. I think golf's still pretty popular, and golfing gear still doing well from Callaway Golf. Zillow Group, Zillow I think is probably going to go bonkers. The housing market is out of control. Zillow going to see some really good numbers because people are looking for houses, and frankly, as someone who's trying to buy a house, they're buying them within days of going on listings. I've seen some that have been purchased the same day as the listing came up. I mean, same day someone's filled out a contract and gone for it. I mean, it must have been, obviously really good offers to sell that quick, but crazy stuff. MGM Resorts still going to see some lack of demand overall with everything going on and the limited capacity. But they'll get back, they will. Sonos makes really incredible speakers. A lot of people may have been upgrading household speakers with stimulus checks. We'll see what that looks like for Sonos. But really good company. Lumen, Thursday after close was PepsiCo. Now, PepsiCo is actually going to see a really different picture from Coca-Cola because Coca-Cola does not have something very important that Pepsi has. Pepsi owns Frito-Lay. The snack side of things probably sees a very good benefit of everything going on. And overall, that's what helps them stay towards a positive revenue, where they're obviously their business, restaurant side as well, losing money, no doubt, losing revenue because they haven't been able to purchase these things. PepsiCo has Frito-Lay, which has seen a massive benefit, so things level out for them, and honestly, it's a really good investment by them. You have AstraZeneca, Kraft Heinz, just generic consumer staples there. All their products pretty much. LabCorp, Tyson, really decent numbers here. Chicken still going wild. People are buying chicken like crazy. We have Yeti, Kellogg's, basic stuff here. no increased demand for these type of companies. Really, people are just buying their normal amounts for the most part of food now. There was a hoarding period last year, but we're not quite there. We're kind of sitting in where we've returned to some normalcy there. ArcelorMittal, CyberArk, and Generac. I don't know if we're necessarily buying a lot of generators lately, but Generac, obviously known for that. After close, my last focus stock in Walt Disney Company. Disney. We love Disney. They're expecting an EPS line of negative 42 cents compared to $1.53 of a year ago, which is not a shocker, obviously. Still, the main portion of their business in the parks segment is going to be down. No longer is it the main portion of their business, though. That's what some people need to consider, because if you look at this revenue line, expected to decline 23.7% year over year. I don't know I'm talking so fast lately, but I'm really talking super fast, and I think I could do a commercial for medicine. AstraZeneca better talk to me. Average estimate of $15.91 billion. I think it's going to be a beat by over $1 billion, frankly. I think this estimate underestimates just the impact that Disney Plus is frankly going to have over this holiday period. I think there's going to be a fantastic period for them in which they're going to see subscriber growth likely get really close to that 100 million mark. I think it's going to be really close. So you got to be looking out. They've had a lot of exclusives coming up and a lot more exclusives to come in 2021 that I think are going to be really massive for them. So I think you're going to see overall benefit, really big benefit here. And if they don't hit it this quarter, they'll hit it next quarter, the 100 million mark. I frankly think it's a bold estimate, but I thought it would be by the end of the next year, and they just keep just blowing through my estimates. I'm telling you. So I think the revenue line will be better than what they're expecting, frankly. I don't think it's quite fair. They're going to be bringing in a lot of money in that digital segment. Then Aurora, cannabis, nothing super exciting there. I mentioned it with Canopy. Don't expect really good EPS lines here. Money lost for sure. Cloudflare, company's been doing really well, and obviously everything going on. Same thing with Datadog, as I put it, next to each other. Really good companies here. Really good tech companies, benefiting a lot and growing revenue at rapid rates, both of them. So we'll look at those, obviously. We have Limelight, Networks, Dexcom, Illumina, GoDaddy. Haven't heard that name in a while, actually, but obviously people still making a lot of websites as online is the thing. So GoDaddy, seeing a benefit there. Seattle Genetics and JFrog, not sure on that. Friday we have Enbridge, Dominion Energy, Newell, Sensient, Fortis, Ultra Holdings, Lincoln Electrics, Moody's, CAE, and Tuffin. Nothing crazy for me Friday. I feel like Fridays, it's underwhelming for me sometimes. I'd love to see that after hours. I want to see it. I want to see more of it. I love it, and I want to be more all up on it. Overall, that's what I got for you today, and I hope you really enjoyed.